Meantime, option bulls seeing downside in the healthcare sector. The sector down nearly 3% this year. And Pete joins us now from Minneapolis. What are you seeing, Pete?
Hey, how are you, Ty? Well, here's what I've got for you. The XLV, which is a pretty interesting, it's an ETF healthcare, obviously J&J, all the major names that you know about. But a couple of weeks ago, when everything was fine and we were trading at about 102 in the XLV, a little higher than that, there were buyers of the March 100 puts. Well, they bought about 15,000 of those. They sold 10,000 of those today for a very nice profit, but that wasn't the end of the trade, because what they're doing today is rolling down by buying the March 98 puts, and they paid about $1.50 for those puts, give or take, somewhere in that price range, for the 10,000 that they bought today, with the stock trading just above 100. And now we're starting to see that this ETF, is trading about 99, so they're already starting to move, but they're rolling down that protection. Anytime we see trades like this, where somebody's taking a profit but then rolling in for more, that's always a good sign. That's somebody who's been right, and I'd like to follow along. It also gives me a lot of comfort with Bristol Myers and Merck and Pfizer and a lot of the names that I hold in my portfolio. Speaking of Pfizer, that's number 2. We're seeing some short-term buying in there. So what are we seeing there? We're seeing the Feb 37s, the Feb 38s, and then the really big one is the 12,000 of the Feb 38.5 calls that are being bought. So aggressively positioning for at least a kind of a move to the upside very quickly, February, but still we've got those puts out there that protect us all the way till March. So one of them bullish, one of them bearish, but I think in the short term, Pfizer might have a shot to go a little bit to the upside here.
All right, Pete, first-time caller from Minneapolis. Thanks very much. We appreciate it. All right,
thanks, Ty. Have a great one, man.